Forex or cryptocurrency? Which market offers more potential for profitability in trading and investment? Both are exciting options, but each comes with its own set of characteristics. In today's video, we'll break down the key features, advantages, and risks of each market to help you decide which one aligns better with your goals and risk tolerance. Let's start with the Forex market. Forex, short for foreign exchange, is where international currencies are traded. The modern Forex market began after the collapse of the Bretton Woods Agreement in 1971, and it has evolved over time, becoming the 6 trillion per day market we know. The value of a country's currency in Forex is driven by supply and demand, and it operates with a high level of liquidity. Now, on the other side, we have the cryptocurrency market. This market emerged in 2008 with Bitcoin, and since then it has rapidly grown. Cryptocurrencies like Bitcoin, Ethereum, and many others have created a decentralized system for transferring wealth free from central authorities. The crypto market is much newer, and it's built around innovation, with daily trading volumes surpassing $46 billion, but it is also known for its high volatility. So, what are the similarities between Forex and cryptocurrency? Well, both markets trade currency pairs, and both use exchanges or brokers to facilitate trades. They also offer leverage, allowing traders to take on more risk for potentially higher rewards. Plus, both markets are open around the clock, though Forex is closed on weekends, and different markets are open at different times, while cryptocurrency is tradable at any point you want without restrictions. It is also important to know that both markets are heavily influenced by economic news and events such as interest rate hikes or geopolitical issues. However, there are some key differences between these markets. The Forex market is known for its lower volatility, making it more stable but often less profitable compared to cryptocurrencies. Forex has about 128 currency pairs, mostly centered around major currencies like the USD, Euro, Great British Pound, and the Japanese Yen. Meanwhile, crypto market has hundreds of thousands of pairs, ranging from popular ones like the Bitcoin USDT to more obscure pairs with low liquidity. Another key difference is the nature of the markets. Forex is centralized, so transactions go through a central authority. On the flip side, cryptocurrency is decentralized, with transactions recorded on a blockchain. This makes Forex safer due to strict regulation, but crypto has an edge when it comes to transparency. Now, let's talk a little bit about the pros and cons of each. Forex benefits from deep liquidity, low spreads, and fast trade execution. It is also regulated and safer, but the market can be complex and comes with high transaction costs. In contrast, cryptocurrency offers low transaction fees, a wide variety of currencies to trade, and an opportunity to invest in innovative projects. It is also, however, a more volatile market with lower liquidity, and in some coins, it carries the risk of fraud. So, which market is better? Well, if you're risk averse, Forex might be the way to go, with its stability and regulation. However, if you're looking for high volatility and the potential for big rewards, the cryptocurrency market could well be your playground. It all depends on your trading style, goals, and risk tolerance. So, ultimately, whether you choose Forex or cryptocurrency, it is essential that you do your research and understand the unique risks of each market. Which one are you leaning toward? Please tell us in the comments below, and don't forget to like, subscribe, and hit the bell icon so you never miss an update. Happy trading!